Hello, everyone. Welcome to today's episode where we're diving deep into the world of exchange-traded funds, or ETFs. I'm Mike, your host, and we're going to explore the incredible benefits of investing in these financial instruments that have taken the investment world by storm. So, buckle up, and let's get started. In the ever-evolving landscape of investment opportunities, exchange-traded funds, ETFs, have emerged as a popular and advantageous choice for beginners venturing into the world of finance. ETFs offer a gateway to the stock market with unique benefits tailored to the needs and preferences of novice investors. This essay explores the compelling reasons why investing in ETFs is a prudent and promising strategy for beginners to embark upon their investment journey. Diversification, a shield against risk. At the heart of the appeal of ETFs for beginners lies their unparalleled ability to provide instant diversification. Diversification, often touted as the cornerstone of sound investing, entails spreading investments across a wide array of assets to mitigate the impact of a single investment's poor performance. ETFs, which are designed to replicate the performance of an underlying index or asset class, inherently offer exposure to a broad spectrum of securities. For beginners with limited capital and knowledge, this diversification shields them from the potential downfall of any one company's failure. As a result, the risk associated with investing in individual stocks is substantially reduced, fostering a more stable and secure investment environment. Affordability, making every dollar count. Beginners frequently grapple with the challenge of entering the investment arena with modest funds. ETFs provide an effective solution to this quandary by offering an affordable entry point into the market. Traditional mutual funds often require higher minimum investments, coupled with management fees that can erode returns. In contrast, ETFs are traded on stock exchanges like individual stocks, allowing investors to purchase fractional shares. This accessibility enables beginners to allocate their funds efficiently across a diversified portfolio without being deterred by financial barriers. Moreover, the cost-efficient nature of ETFs, with generally lower expense ratios compared to actively managed funds, ensures that beginners retain a greater portion of their investment returns, enhancing their potential for long-term growth. Simplicity, navigating the complexities. Navigating the intricate landscape of financial markets can be intimidating for newcomers. ETFs offer a simplified investment avenue that is well suited for beginners. The transparent and straightforward structure of ETFs allows investors to comprehend their holdings and performance with ease. Unlike the complexity often associated with analyzing individual stocks, beginners can focus on understanding the broader market trends and indices that their chosen ETFs track. This simplicity not only reduces the learning curve but also instills confidence and a sense of control in novice investors, encouraging them to stay the course and resist making rash decisions based on uncertainty. Flexibility and liquidity, adapting to changing circumstances. Investing in ETFs provides beginners with a high degree of flexibility and liquidity. Unlike traditional mutual funds, which are typically traded only at the end of the trading day, ETFs can be bought or sold throughout market hours, similar to individual stocks. This real-time trading capability empowers beginners to respond promptly to market developments, capitalize on opportunities, and adjust their investment strategy as circumstances evolve. The liquidity offered by ETFs ensures that beginners are not trapped in long-term commitments, granting them the freedom to adjust their portfolios in alignment with changing goals or market conditions. Conclusion. In the realm of investing, exchange-traded funds, ETFs, stand out as an ideal starting point for beginners seeking to embark on their financial journey. The advantages of diversification, affordability, simplicity, and flexibility that ETFs offer provide a solid foundation for newcomers to navigate the complexities of the stock market with confidence and prudence. As beginners venture into the world of investments, the attributes inherent to ETFs empower them to make informed decisions, manage risks, and embark on a path toward financial growth and security. Here are the top 5 ETFs I recommend that everyone should have in their investment portfolio. They include growth and monthly dividends. iShares S&P/TSX 60 Index ETF, XIU. XIU tracks the S&P/TSX 60 Index, which includes 60 of the largest and most liquid companies listed on the Toronto Stock Exchange, TSX. It offers broad exposure to the Canadian equity market, with a focus on large-cap stocks. BMO Equal Weight Banks Index ETF, ZEB. ZEB seeks to replicate the performance of the sole-active Equal Weight Canada Banks Index, which includes an equal-weighted basket of Canadian bank stocks. It provides targeted exposure to the banking sector within the Canadian equity market. Vanguard FTSE Canada All-Cap Index ETF, VCN. VCN aims to track the performance of the FTSE Canada All-Cap Index, which covers the entire spectrum of Canadian equities, including large-cap, mid-cap, small-cap, and micro-cap stocks. This ETF provides comprehensive exposure to the Canadian stock market. VFV.TO is the ticker symbol for the Vanguard S&P 500 Index ETF listed on the Toronto Stock Exchange, TSX. Here are some key points about VFV.TO. Fund objective: VFV.TO aims to track the performance of the S&P 500 Index, which is a widely recognized benchmark of the largest 500 publicly traded companies in the United States. Investment strategy: VFV.TO seeks to replicate the performance of the S&P 500 Index by investing in a portfolio of U.S. equity securities that correspond to the index's composition and weighting. Diversification: by investing in VFV.TO, investors gain exposure to a diverse range of large-cap U.S. companies from various sectors, including technology, healthcare, finance, consumer goods, and more. Costs: VFV.TO is known for its low expense ratio, which is the annual fee charged by the fund for managing your investment. Vanguard is known for its commitment to providing cost-effective investment options. Liquidity: being an ETF, VFV.TO offers the advantage of liquidity, allowing investors to buy or sell shares throughout the trading day at prevailing market prices. Dividends: VFV.TO may distribute dividends to investors based on the dividends received from the underlying U.S. companies. The specific dividend yield and payment frequency can vary. Currency: as VFV.TO tracks U.S. stocks, the fund's performance can be influenced by fluctuations in the exchange rate between the Canadian dollar, CAD, and the U.S. dollar, USD. VDY.TO is the ticker symbol for the Vanguard FTSE Canadian High Dividend Yield Index ETF listed on the Toronto Stock Exchange, TSX. Here are some key points about VDY.TO. Fund objective: VDY.TO aims to track the performance of the FTSE Canada High Dividend Yield Index. This index is designed to reflect the performance of Canadian companies with higher-than-average dividend yields. Investment strategy: VDY.TO invests in a portfolio of Canadian equities that exhibit strong dividend characteristics. It seeks to provide investors with exposure to companies in Canada that have a history of paying dividends. Dividend focus: the fund is focused on providing exposure to dividend-paying companies, which can be appealing to investors seeking income from their investments. Dividend-paying stocks can provide a steady stream of income, especially for those looking for more stable returns. Diversification: by investing in VDY.TO, investors gain exposure to a diversified basket of Canadian dividend-paying stocks across various sectors, including finance, energy, utilities, and more. Costs. VDY.TO is known for its low expense ratio, which is the annual fee charged by the fund for managing your investment. Vanguard is known for its commitment to providing cost-effective investment options. Liquidity. Being an ETF, VDY.TO offers the advantage of liquidity, allowing investors to buy or sell shares throughout the trading day at prevailing market prices. Currency. VDY.TO is denominated in Canadian dollars, CAD, and its performance is influenced by the Canadian equity market. Well, there you have it. Those are the solid ETFs suggested. Remember, always do your own research and consult with a financial advisor before making any investment decisions. If you enjoyed this video, don't forget to like, comment, and subscribe. And let me know in the comments if you want to see more videos like this. Thanks for watching, and I'll see you in the next one.